This is SRM Tech Talks. Strategic Resource Management is a full-service consulting company. We specialize in everything from payments to digital banking to core to negotiating contracts with the brands to fintech. And one of the things that our clients and ourselves internally found was that technology has been moving so fast that it really pays to have people who are passionate about it and want to talk about these things. And I've found that there's no better way to learn something than to have conversations around it, in particular to speak about it. And so for me, this has been a long learning journey of a few years that I've been doing Tech Talks. And actually prior to Tech Talks, this was called, somebody needs to go on mute. We used to call this, it was Crypto University. So we really had started this in the digital asset space, and then it evolved as people had broader interests, and now it's kind of technology in general. So, artificial intelligence, digital banking, even quantum computing, all of these are things that we've talked about or will be future topics. Super excited to talk to you today, and appreciate you sending over a little bit of background about yourself. And I want to do an introduction for you in a minute. But for me, this is kind of personal. And the talk, I believe we called it. We were kind of the talk about the discuss the limitations and shortcomings of customer service chatbots in regards to something that the White House put out last month, which was a time is money initiative. And we'll talk a little bit about what that is. I read it yesterday. I remember it coming out, and I read it yesterday, and I was like, that's funny. Like, okay, those are all really good points. I wish they would apply that to the government themselves. I'm thinking about the DMV and taxes and like nuisance fees. Like, boy, if you miss a $2 tax payment, you're going to get hit with a pretty significant nuisance fee. But I guess do as we say, not do as I do. But my own personal experience around customer experience comes from a place. It was actually a credit card company started, I want to say in the 80s. It's called MBNA. I joined it in 1996, 94, somewhere around there. And it took customer service. Never really worked at a company that took customer service so seriously. And it grew from a small credit card company that was operating out of a grocery store to one of the largest credit card companies in the world. Ultimately got acquired by Bank of America. And at the time, I think it had $54 billion in credit card loans. There were months where we were growing 1 million customers a month. And we took customer service unbelievably seriously. We always said, put the customer first. That was, in fact, over every single doorway of the company. Our paychecks said, brought to you by the customer. There was something we're going to talk about chatbots and responding to the customer via phone and other channels. Back in the day, we think about picking up the phone. Like, think about now how long it takes to get to a live person on a telephone. At MBNA, we had something called 2-ring pickup, which meant that didn't matter if you were an executive in your office, didn't matter if you were on the floor. If a phone rang more than 2 rings, you were demoted. Like, it was a major problem. So everyone was drilled into their heads to pick up the phone on the 2nd ring. Never get to the 3rd ring. And in fact, it drives me nuts today to hear the phone ring more than twice because I spent 15 years in that environment. So that's the background that I come from. Super to have you as our guest. I was reading a little bit about your bio. You're a linguistics. See, I can't even say linguistics properly. Linguistics and a computer science guy with 6 patents, a bunch of papers, including one I think we'll talk about today called Balancing Bots and Humans. I read that very nice, short little paper, but it was posted on LinkedIn. You're a Google alumni. You've got experience in machine learning, which we now call AI, a search engine, some of the technical aspects of that. And you're the founder and CEO of a company called Agent IQ. And so with that, and I know we've got some questions and answers we want to get through. I want you to talk a little bit about your passion, what brought you to this. You've obviously got a product that you've brought to market. We've talked about that before. Pretty exciting. What problems does it solve? How did you get here? Maybe you can talk and give a little bit background of the White House initiative. And if not, I actually had it up earlier, but there was a couple bullet points in there that I think are worth talking about. So I'll give you the opportunity to do that, and I can fill in anywhere that you might have missed out.
Sure. Thanks, Larry. I really appreciate the opportunity to join this conversation and share a little bit more about our point of view. As you mentioned, I am the CEO and co-founder of Agent IQ, and Agent IQ provides financial institutions, banks, and credit unions with a digital relationship-based customer service platform. And this is a platform that does have AI built into the functionality and kind of helps the overall experience. But we started with the realization that human touch is important. Many financial decisions are very intimate and emotional, and people do want to have a primary point of contact, somebody they can relate to, get the advice from, in addition to getting efficient and what I call low effort customer service. Low effort customer service means the time that they have to spend on obtaining the help they're looking for is limited, time and effort, right? And the AI does play into this functionality, but we always thought of it as not replacing the human touch, but really augmenting that and providing efficiency and scalability, but not getting way of the human to human conversations. And you mentioned the White House initiative, time is money, and one of the big points there is really around customer service and chatbots, virtual assistants, and how they're being used in customer service. And a lot of the messages and points that the White House was making in that around not trying to box in customers and prevent them from talking to humans when they want to, and not making it difficult for them to get to human help when they desire it, so is something that's a pillar of our service, right? And that's something we have built in from 7 years ago when we started the company, because we understood that while chatbots and virtual assistants are helpful, they can provide 24/7 hour service, they can sometimes provide answers faster than any human could. They do have limitations, and it's important to recognize those limitations and ultimately provide customers with an escape hatch and accessibility to higher level help, human help, when they desire to get that. So that resonates very well, and I'm definitely happy to chat about specific aspects of that if that makes sense.
It does, and I love the idea of an escape hatch, because I can think personally how many times I've been on the phone and all you want to do is talk to a customer service rep. And in the old days, you could hit like pound, 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 or like, we've all probably got to the point where we've tried lots of different things. And it's so frustrating when it doesn't work, and or even worse, it just hangs up the phone, and it leaves with a terrible customer experience. And we understand, at least I think we understand, why companies had gone that way, because there were huge cost efficiencies of trying to service the customer in kind of a decision tree or a phone tree, answer the questions without routing it to a live rep. But that obviously introduces really poor customer service. Sometimes it works for some of the basic things. I know, like credit card companies, what they used to do is look at like the top 3 or 4 things that people were calling in for, right? So, your balance, your credit line, your availability, last payment received. So they would list all of those things, and then they would bounce out to a live rep if one of those didn't serve you. So I think that's important. I think some companies have taken it too far. I'd be curious, how do companies, and with your solution, how do you balance the efficiency that's gained by using chatbots and maybe now AI versus having customer service and making sure that they get the resolution that they need?
Yeah, and I think the key here is really having the right metrics in place and measuring from the right perspective. The issue that you mentioned with virtual assistant and or IVR systems kind of trying to box in a customer without, letting them talk to a live rep is often due to the fact that these systems are evaluated on their deflection rate, first and foremost, meaning how many times they managed to prevent, the conversations to get to live representative, right? And if that's the metric that you care about, that you're optimizing for, it very naturally leads to being overly aggressive and protective in really letting the thing move forward. A better metric and something that we try and encourage our partner institutions to do, and that we kind of implement our system, is really focusing on the customer effort and customer satisfaction, right? And there's definitely, like, for example, in our system, whenever we have a virtual assistant interacting with the customer, be it through some kind of multi-choice kind of selection menus and or in a natural text, kind of have them type the inputs, we provide an easy access to a human. And what we see, even though
Looks
there is
like
an
your
access,
audio might have frozen up just a little. Does anyone else having issues with Slavin's audio, or is it just me? Nope, maybe it's just me. I'm gonna switch networks here, folks. You guys keep going.
sure. And as I was talking, in our platform, whenever we have interaction between chatbot and the customer, we encourage institutions to provide an easy to access escape hatch, as I mentioned, that immediately transfer the conversation to the live rep. And what we see, even though there is an escape hatch, in many cases, anywhere between 30 and 60%, the customers will choose to engage with the chatbot. And that's because they know in their mind, look, this is an easy question, a chatbot should be able to answer. If somebody is looking for a routing number of a bank, sure enough, the chatbot is very likely to be able to answer that question. If somebody is trying to decide between getting a HELOC or remortgaging their house, that's not a question that a chatbot will answer, or that they would be comfortable with the answer they get, and they immediately can go to live rep, right? And by focusing on customer effort and not introducing unnecessary steps for them, so not making them ask for a rep, not making them answer the questions that are not helping lead to resolution, and immediately passing control to live rep can significantly improve the customer satisfaction. It actually improves their perceived effort in getting to the live rep, and ultimately leads to better overall experience.
So Slavin, we know there are some consumers, customers from a demographic profile standpoint that almost would prefer not to talk to a live person, and some that do. But at the end of the day, if you want a problem solved, you probably want to talk to a live person. Likewise, there's probably certain topics where people may be more comfortable talking to an AI or a chatbot about than a human being, because they feel like they might be being judged. Like maybe I've got a delinquency on my credit card payment, or I'm calling about not being able to make a mortgage payment or something along those lines. Are companies or are solutions able to differentiate between those sorts of dispositions and kind of route those calls appropriately? Or is there like we try this first and then we go to this second based on this profile? Is it that scientific yet, or is it not necessarily?
So I think it depends, from company to company, solution to solution. We definitely do have the capability, and we do, again, allow to provide different options for cases where the user is authenticated, right? So if you know what customer is, we might have some information about their segment, like the group they belong to, be it based on demographics or tendencies, and then provide them different options. And that is very effective in getting them to faster answer. In the case it's unauthenticated chat where we don't know much about the customer, then it's much harder to do that, because ultimately, we don't know uh, anything about them, and so typically start with the most common kind of general scenario, and then you can guide the user to either an option that gives them the answer they want or get them to a live rep. And in that process, you can also decide what set or subset of live reps actually is most likely to be able to answer that, and route to them directly instead of going into some general queue. They can go into
the balancing.
Say,
are you able to hear me?
Yes.
I wanted to come back to one of the points in the paper that you had, balancing improved efficiencies that AI and chatbots can provide with impact on customer experience. One of the bullet points was prioritize consumer effort reduction, not cost reduction. So I like that a lot, right? Because it's reducing barriers. It's kind of reducing barriers.
Yep.
I always talk about reducing barriers to entry. Reducing any sort of barriers is good from a customer experience. And we've heard a lot about artificial intelligence being used to make things easier and kind of reduce some of those barriers. Well, that's great, and it works until it doesn't. How can banks and credit unions ensure that their technology is genuinely helpful and not just another hurdle for customers to jump over?
Sure. I think the first step is really to understand that any technology will have limitations, and to try to understand what those limitations are early on. And that might be working with the vendors like us that will kind of help guide the institution to that understanding, and kind of work with them to configure the system and get it in place where both the institution is comfortable with the configuration, but also it's very helpful for the end customers, right? And AI will be improving, and again, the way, the scale and rate that it's improving is increasing every day. So the systems are going to get better, and so the line of what is doable today and what is kind of better done through an AI automated system is going to keep moving, and that is okay. I mean, that's what technology gives us, the progress gives us. What is important thing from the bank perspective is to be aware where the line is, and to some extent not to try go ahead of the line for the sake of cost reduction, right? That's where the friction comes, when the motivation is more about kind of reducing cost than solving the customer problem, reducing the effort, as you mentioned, and that in turn increases friction for the customer and leads to a negative impression of dealing with the AI automated system, right? And I think again, one of the key insights in that post that you mentioned is that by focusing on the customer effort as a primary metric and not necessarily deflection or cost reduction as one of the leading guides, will help go a long way in kind of getting the best of both worlds. The other thing I want to mention, the reason why we talk about the effort and not time from the customer perspective is it is very different from the customer perspective if you're waiting on the hold on the phone and you have to pay attention, you cannot do anything else on one hand, versus you are using some kind of asynchronous communication method like messaging or authenticated messaging, where you don't have to actively wait. You send a message, you continue with your life, you can do whatever you want until you get a notification that you have a response, right? Yep. While it's taking a longer time to get a response, from the effort perspective, you are spending no effort during the wait time, so it's not that burdensome. So that's one of the reasons why that asynchronous communication has really taken off for friends and family communication, because it's easy and convenient, and you can continue doing whatever you want while your problem is being resolved. And that's one benefit that's often overlooked, but can really make an impact. So financial institutions can actually have the benefit of providing or taking more time to provide an answer while still being perceived as better customer service from the customer point of view.
We talk about how AI can work and how AI sometimes still makes mistakes, but as you mentioned, it is getting remarkably better. In fact, I call out my wife on this, but like I find that I can get more accurate answers from AI than I can often get from my wife or from anyone else for that matters. And it's important to consider that because human beings also are infallible, right? We also make mistakes. We also don't get our facts right. There are big improvements with like RAG routines and stuff where you're utilizing a company's information in a specific data set that the AI can call upon to give answers. So I think to your point, there's a future in that. We've even seen some companies, Klarna comes to mind, which is a buy now, pay later solution provider, that they were able to cut about $50 million of expense out of their global corporate expense structure through utilizing AI from a chat function instead of kind of live chat. And there's a unique one, right? Because they service a lot of different countries and a lot of different languages, and AI is very set for that. So coming back to AI and maybe how do you create loyalty through AI? So what role does AI play in creating those memorable experiences that keeps customers coming back? And I understand from your solution, it's not just pure AI, it's a combination of knowing when to bring a live person on the phone to provide that escape action. I want to give you an opportunity to talk about your specific solution, and maybe you can do that through the answering this question. But how do you create loyalty through AI or better customer experience?
Sure. And I think that's a great point. Like I definitely do want to encourage, financial institutions to start working with vendors like us that, do use AI in their solutions. And I believe that AI can provide a lot of value already. Some of the limitations that AI has are not related to actually technology and natural language understanding and those capabilities, but have to deal with APIs and kind of compliance and risk management and other bits that are kind of specific maybe to the highly regulated industries like financial industry, right, where the limitations are to some extent artificial, but nonetheless, AI can already provide a lot of value. Now, how to use AI to provide the best experience and actually increase loyalty of the customers and provide for better experience, really the trick is to not or to make AI as seamless as possible from end consumer and customer perspective, right? So have it be there, helpful when it can, and then get out of the way as soon as possible when it's clear that it cannot satisfy the customer need. And that might be because either the AI is not understanding what customer is asking for, or there's some other known limitation. If, for example, for regular reasons, maybe anything that has to do with wire transfers is not subject to being handled by AI, then there's no point of AI-based system, trying to drill the customers and trying to do something for them when, it's already known that it's not something that will be able to handle. And using that to, again, make it easier for end customer, for those easy, mundane tasks, maybe that your live reps are not so excited about to do, basic inquiries, FAQ types of questions, types of questions where any human can find the answer, but it's a little bit tedious to get at it. And using AI to provide that makes a lot of sense. Another thing that's great about AI and automated systems, they are 24/7, so they can provide help to customers, in off hours. Most banks have limited office hours and maybe somewhat longer kind of digital customer service hours, but very few have 24/7 support. With AI and automation, you actually can provide that 24/7 support, and that can go, again, that can try to answer the question, but it can also obtain some information for, say, a follow-up call, like a callback functionality that again can help the customer get the answer in the morning, but without making them come to the service again and provide information again and reducing effort for them. So all these small wins from the customer side will increase their buy-in into the technology, and ultimately will lead to better experience, and better experience leads to loyalty, as many data points have shown before.
Yeah, I mean, I've seen that personally, where AI is starting to creep into the consumer, servicing aspect of things, and it does appear to be getting better in most cases. So I think it comes down to automation, expense reduction, provide the right answers when possible, and when not, get out of the way and get a traditional human, right? So keeping a human in the loop. You mentioned regulatory body, just as an aside for people. If I put the post in the chat for the White House initiative. The regulatory body that they're talking about that will probably be responsible for this is one of our favorites, right? The CFPB. Just from an awareness standpoint, want to make sure people were aware of that. So, Slaven, how do you measure these sorts of things? And it's interesting because I've had people ask me before, like, hey, what's the return on investment on this stuff? And I'm like, yeah, this is not the way to look at it, return on investment, because this is such new technology. There's other ways to measure whether or not this stuff is being effective. What are some of the ways that you've found, maybe measurements that are a good way of saying, okay, yeah, we're seeing success? Is it customer satisfaction? Is it NPS? Is it something else? Can you talk a little bit about that?
So I think definitely kind of subjective measures like customer satisfaction and NPS, that are collected to some survey or feedback mechanism, are a great proxy of customers' impression of the level of service they have received, and that can easily distinguish between poor customer service that frustrated them, be it because the chatbot didn't do what they wanted, or because they had to wait for a very long time to get a live rep on the phone. That will be captured by by kind of customer feedback. Customer satisfaction being one that I prefer, just because it's a little bit more clearly related to the experience than the NPS score. The other metrics are deflection. Although I kind of said deflection should not be the first and only metric that you focus on, that it does and can show quickly ROI in terms of cost reduction, because live reps, while they can provide a more broad level of service than say chatbots can, they're more expensive too, right? And that's a real trade-off. So any customer, any conversations that don't end up with a phone call, or even chats that don't end up with a live rep being included, are much cheaper for the financial institution, and then that's the real ROI. And then things like customer effort, I think, measuring things like how many actions on the side of customer took to get to a certain point or a certain resolution, including if they had to change the channel that they, started interaction and then finished interaction. For example, a not so great experience is when a customer starts dealing with the financial institution through a text-based chat, and then is instructed to call the call center in the middle or end of that conversation. That's not a great experience, where you have basically a channel change and you don't get the resolution at the first point of contact. So some of these metrics are reasonably standard and common in customer service center, and they're not very different in the cases where AI is deployed, but some that do capture the kind of just the subset that AI is responsible for, is basically asking customers whether they were satisfied with only the interactive kind of automated bit of the experience, as opposed to the whole experience. And that can be, I've seen it done with very simple, like thumbs up, thumbs down kind of selections on the UI, or it can be done through like a more properly run surveys.
And I think it's important to get this right, not just from a customer service standpoint and a reputational standpoint. As I mentioned before, the CFPB is going to be the one that's taking this very seriously. So, there couldn't even be fines. In fact, I'm going to read from the CFPB, or I'm sorry, from the White House article. They say they want to ensure accountability for companies that provide bad service. People shopping for products and services should be able to rely on consumer reviews, which to assess companies that provide streamlined service, not waste their time. The CTF also has proposed a rule that finalized as proposed would stop marketers from using illicit review and endorsement practices such as fake reviews, blah, 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 blah. So they're going to go after companies that are providing, quote, bad service. They also talk about the limitations and shortcomings of customer service can be useful for answering basic questions. They often limit the ability to solve more complex questions and disputes. I think we've all had that experience. Instead, chatbots frequently provide inaccurate information, give the runaround to customers seeking a real person. I've definitely experienced that. The CFPB is planning on issuing rules or guidance to crack down on ineffective and time-wasting chatbots, and they say used specifically by banks and other financial institutions in lieu of customer service. The CFPB will identify when the use of automated chatbots or automated artificial intelligence voice recordings is unlawful, including in situations where customers believe they're speaking with a human being. So one, I think that we're going to have to differentiate between when you're talking to a real human, when you're talking to an AI. I think you're going to have kind of an escape hatch. I think they called it in theirs. Trying to see, look here, what they called it. They called it doom loops, right? Where you get caught in this doom loop where you can never get out, and you never really get your question answered. So all of those things are going to happen.
Yeah.
I mean, technology, including AI, is evolving really fast, and so are consumer expectations. Some of that's being driven by demographics changes. Some of that's being driven by changing expectations driven by COVID. A whole bunch of things are driving that. How can financial institutions keep their AI and customer service tools up to date and in line with what consumers really want?
That's a great question. I think, the key point that I'd like to make is that customers are developing their expectations based on experiences they get outside of financial services, in addition to what they experience within financial services. So, the customers are becoming more demanding because they've experienced great service with Amazon or Starbucks or whoever, right? And once they're used to that high quality service, seamless service, low effort service, they want to get the experience from their financial institutions also. Although there might not be any financial institutions today that are as good as Amazon in that aspect, right? And when financial institutions are discussing about improvements to the customer service, they really should be looking at outside of the vertical and to kind of see what the bar could be. Now, that said, I do think it's important for financial institutions to do two things, is really to adapt reasonably agile mindset in terms of providing customer service. So this is not a fixed bar that doesn't move, but it's to some extent is a moving target. And it's important for financial institutions to gradually keep adjusting their customer service posture to kind of keep meeting or keep as close as possible to that moving target, right? And this does require making changes. I believe that making smaller changes and doing it quicker actually leads to much better results over the long term, and that's ultimately what we recommend our financial institutions partners to do. And then assume that AI and technology is going to get better, and to the extent that they wait on the sidelines longer, they will be behind further. So highly recommend getting in as soon as possible, starting small, and then iterating as internal understanding and level of acceptance increases, and make it more and more prominent and more visible to end customers.
So, Slaven, one of the things that we do as a company is we evaluate third-party vendor relationships for our clients, which are banks and credit unions. We found that negotiating a contract, evaluating a vendor is very different with kind of new emerging tech than with, say, traditional vendors like a Fiserv or a MasterCard or a Visa. What are some things that you could give, like maybe some examples of, or recommendations in terms of what to look for in a good partner in this space?
Yeah. Oh, I think that's a great question. So, I'd recommend to kind of consider a few of the following, right? First, is the vendor open about the limitations of technology, right? If you find a vendor that says that, their product is do it all and perfect at everything, it's, should be very suspicious, right? Because there are definitely limitation technology, and ultimately, not everything is possible even in ideal conditions, right? The second one is really working with vendors or identifying vendors that have the flexibility in terms of initial setup, deployment, and making changes after the initial deployment, right? If, as I mentioned, it's very unlikely that you will, even with very good technology, that you will have a perfect posture from day one. And so that's why it's important to be able to gradually roll out and adjust as customer feedback comes in, as employee feedback comes in, as people are getting trained and more comfortable with the platform, that the actual posture or kind of deployment of the platform can be adjusted to kind of get the best of both worlds. And then three is really have the ability to control what is actually enabled or what's visible to the end customer. So not necessarily believe that completely out of the box solution will be sufficient. So, but that the tone of language, the types of questions that are being answered, and type of answers that are provided need to match the voice of your financial institutions rather than some generic ones. And I think these three kind of points, if they're valid, can definitely help you identify vendors that are likely going to be good partners.
Slaven, how important is funding for again, a lot of these, I presume your company also kind of is a startup. How important is that funding, where they are in the funding round and what kind of partners they have? Because that's something I would probably consider and want to look at with any sort of partner, because as you know, with a lot of these technologies, I think back to digital asset space, there was a bunch in the banking credit union, and they went from like, probably a dozen to one. And we've seen that with everything. We'll see that with AI. We see consolidation. How important is funding, and how does that work for you guys? Are you guys fairly well funded? Are you self-funded? That may be a tough question to answer in a public setting, and you don't have to answer it, but I'm just curious, like, what are the things, how important is that of a question when picking a partner?
I think, that's definitely typically part of the financial due diligence that most financial institutions do from my experience. And, I'm happy to say that we are both, well-funded. We have raised money from external sources, including some of our partner banks. And, we are well-funded for foreseeable future. And that's great. But I think more important question to maybe ask the vendor is, what is their, 3 to 5 year vision? If you have vendors and if you're talking to CEOs who are talking about, building up the business as quickly as possible and exiting the business, that's probably not a great,
Partnership.
partnerships. Whereas there are other founders, myself included, ultimately I started Agent IQ with the goal of solving the problem and, having a great impact on financial services or financial institutions, but in society in general. And I am, excited about the impact that we're going to have. And obviously that only increases with the time and success we have. And I'm not, I'm not interested in necessarily exiting as soon as possible because, it is about the long-term impact. And obviously, that's not leading me in the direction of looking for an exit as soon as possible.
Yeah, that's a great answer. One of the questions is like the dreaded question for companies that are new is how many customers do you have? Now, I know you have some existing customers. I'd love you to talk a little bit about those, but I heard something funny the other day, and I think it was True Stage Ventures. They were on stage and someone was saying that it was a fintech company, and they said they got that dreaded question, right? They said, oh, well, we've got like 3 or 4, that are going to be signing, but we don't have existing customers. And the client said, good, I don't want you to have any customers. And the company said, well, why is that? And they said, because I'm going to drive your roadmap for the next 6 years. And so, it's not always a bad thing, but I do know you have some existing customers. I think First Arkansas Bank and Trust is one of those. And maybe you can talk a little bit about what are some of those customers using your services for? Maybe you could talk a little bit more about your particular service and how that might be applicable for some of the folks that are either on the call today or they're going to be listening to it as a recording.
Sure. Yeah, so we definitely have a bunch of live customers, clients right now, and they go from as small as, say, 300 million in assets to very large in tens and even 100 billion plus in assets, right? So it's fairly wide range. Most of our clients are banks, but we do have some credit unions and even wealth management companies as our clients. That said, we still, I think of us as still an early stage company in the sense that we do listen to our clients, and we have a very relationship-centric view of our client relationships. So we meet with most of them on a bi-weekly basis. And when we meet them, we definitely listen, about things that are going well, but also things that they would like to see change in our platform. And we use that as input in our roadmap and product planning, because ultimately our customers know best, of what is needed, to make the platform even more successful and more useful for them. So we definitely have that, kind of hands-on relationship mindset, and we do meet with our clients frequently. We are a very agile shop in terms that everybody runs on the same code base, and we do releases almost basically bi-weekly. I think we did like 23 releases in 2023. So the platform gets updated frequently. That doesn't mean that you as a financial institution have to use all the features that we have. Everything is highly configurable through a dashboard that financial institutions have access to, and they can decide which of the new features they want to enable and when for their customers. So the combination of these really helps us kind of get the input from the financial institution partners that are currently using the platform. Obviously, as a CEO and kind of product lead to some extent, also looking outside to see what else is happening in a realm of customer service, technology, AI, chatbots, and in wider to see kind of what would be applicable and relevant to the problem that we are trying to solve, and that also goes into the roadmap. But we are balancing, that input with the customer feedback, and ultimately trying to optimize our delivery model to make it available to financial institutions as soon as possible, as robust as possible.
So, Slaven, we've done a great job talking about the need and how to incorporate some of this technology and keep humans in the loop. Can you take 5 minutes to really talk about your solution and what it is? Because we've kind of danced around it, but I do want to give you an opportunity to talk a little bit about what is your solution that you've got in the market today.
Sure. So when we talk to financial institutions, they often tell us, banking is about relationships, right? And these relationships used to be built in person, in branch. We all know now, especially after COVID, that branch visits are going down, and most of customer service and use transactions are moving to digital space. Typically, the problem with digital space is that it is what I would call humanless, largely self-service. And when there is a problem, customers have to still resort to calling the bank or the financial institution and dealing with all the kind of pain points that we have discussed before. Our platform is really designed to help move those relationship building and service into the digital space while providing all the tools that are necessary for providing a chat or text-based customer service. So it is a platform that provides ability to use asynchronous authenticated messaging, video calling, co-browsing, file sharing, a bunch of other things that you would consider in using efficient kind of digital-based communication. It has AI built in the platform. Again, we think of AI as augmenting the human and not replacing the human in this conversation. And that can be answering questions in kind of self-service manner, like we talk, like a chatbot experience. It can be AI that's helping the bankers be faster and smarter, better in answering the customers by providing relevant responses, suggestions for responses, any documents from the knowledge base that are relevant to the conversation and similar. And then third, by analyzing all the conversations on the platform, so the trends and the topics, the pain points that customers are dealing with can be easily understood, visualized, and act upon. So our platform is very easy to deploy. We've gone live, from contract signing to full live deployment in as little as 4 weeks. Typically, it's order of 2 months. We're largely, part of the time is spent on like training and kind of setting up the financial institution for the launch rather than kind of technical work that needs to be done. The platform is highly configurable and flexible, so it can provide different journeys for different segments of customers. That can, unauthenticated customers can have a different experience from the authenticated customers, but also high net worth individuals can have very different experience from, say, student account holders or minor account holders or whatever that might be, any segmentation that's appropriate. And by providing this configurable platform, we are able to provide financial institutions with the ability to provide seamless, efficient customer service for every segment of their customers, with utilizing AI for efficiency and scale, with providing human touch for differentiated service, and then with using technology to make this seamless and very pleasant from the end customer perspective. And ultimately, what we see, this leads to higher customer satisfaction. It leads to reduced expenses, reduced call volume for the institutions. We have seen 30% to 70% reduction in call volume, especially offline or off hours. Call volume goes down. We've seen it as high as 90% in some cases. Through AI self-service, we can see deflection in rates of 30 to 60%. And then for more personal high-touch service, we see increased account holding and increased deposits in order of 10 to 20%, depending on the level of service and length of relationship.
So, Slaven, I'm going to paraphrase, and you can tell me if I get this right, but you've got a solution that provides efficiency, better customer servicing, and insights through augmented technology, but never losing the human touch.
That's a pretty good summary, and it is a communication engagement solution. So it really helps connect customers with the bank, with the bank employees.
Well, this has been an outstanding conversation. We've got 5 minutes left. I want to open it up for any conversations that our guests may have. So we'll go ahead and see if anyone's got some questions. If not, I'm sure I can come up with a few. No questions. Well, or you can feel free to put them in the chat bot. I'll ask a question. So how do we ensure a consistent customer or member experience across both digital and in-person touch points?
That's a great question. I think big part of this that we do so is by providing that ability to keep talking to the same person over a longer period of time. Typically when you go in branch and physical, you're talking to maybe the same teller or dealing with the same relationship banker, right? And with our platform, you're able to get that experience in a digital space, and that definitely helps that. And then some of the more standard answers is really making sure that the training is consistent across people who are doing physical in-branch service versus say digital service, and that the materials that they would be sharing with the customer member are consistent, right? And making sure that they're kind of evaluated on similar metrics and ultimately rewarded for same types of desirable behaviors.
Good answer. And if there was one question we didn't ask that you get asked frequently, or that I should ask, what would that question and answer be? And then it looks like Charles Spillman also has a question. So maybe I'll let him ask his question first. Go ahead, Charles. Feel free to take yourself off mute and ask your question.
Yeah, thanks, Larry. It kind of goes along with the question that you just asked, I think, which is there's that old quote from Churchill that says, perfection is the enemy of progress, right? How do you know? One of the things I struggle with is getting something ready to go to launch, right? That's not quite where I want it to be, but it's good, and it would, it solves some problems. How do you know when? Because you don't want to put something out that's half baked, but when do what's the tipping point for where something should be, released to the user experience, but it's not exactly where you want it yet?
That's a great question. Being a startup founder and working in technology for a long time, in our circles, the common mantra is, if you think you're ready, it's already too late, because to some extent you have to move a little bit earlier than you're really comfortable with. And I think really the trick is to start small, right? Rather than maybe doing a full launch and making it available to everybody, you can start small, doing friends and family, maybe employees only type of launches, where you are able to make the service available and visible to the people that are not intimately familiar with, what it's supposed to be doing and how it's supposed to be working, and taking that feedback to both increase your comfort level and then improve the service and the service posture around it, right? So I do think starting earlier but starting smaller is kind of the best approach, and then being understanding that ultimately, what you have today is probably the worst version that you will ever have. It's only going to improve as the feedback comes in, as the platform improves, and as your understanding and your service processes improve. It's going to get better. So I say start sooner.
Yeah, thanks, Slaven. That's good to hear. It reinforces some things that we've done recently. We just about 60 days ago we launched an employee-only channel for just that reason, is to put things, kind of a post beta, but maybe not enough eyes on this yet. And then the other thing that we've done is we've done some just like quiet launches. So we've made things available, but we haven't really marketed that it's available. To kind of hopefully get some feedback, but not have people breaking things or find out that it's maybe wasn't quite ready. But I'm going to remember the if you think you're ready, you're late. So I'm going to keep that in mind. Thank you.
Yep.
Slaven, we are up on time. I want to thank Slaven Bilac for taking the time to be on our Tech Talk. This was a fascinating conversation. For those that don't have access to the chat, so if you're watching this on a recording, their website is agentiq.com. You can reach out to them. Feel free to reach out to me, Larry Press, if you have any questions, and I'll always get you in contact with Slaven. But Slaven, thank you very much. Any last words before we end the talk?
Sure. I think we definitely would love to continue this conversation with you. And if anything I've mentioned today seems interesting and relevant, if you would like to improve your customer service and start deploying kind of AI-based systems, and you don't know where to start, we definitely would like to have that conversation and maybe show you what you have and see if it makes sense to move forward. So by all means, contact us through our website, and I'm guessing my contact information will also be available. So feel free to reach out.
Great. Well, thank you all for attending, and look forward to another one in another week or so. Take care.